Over the last couple years, ever since we saw the big update from the SEC around the XRP lawsuits, we have been talking about and really kind of focused on the other regulatory bodies like the CFTC, for an example. And the reason why is because we always thought that the SEC was not going to be the big player to actually bring in regulatory clarity for crypto. And I still think that this is true even today. And when we think about that, we really look at the SEC working with the CFTC to regulate crypto as a whole within the US. And I think that this is actually ongoing right now. Now, on top of that, when we think about the CFTC, it's very important to focus on a lot of the moves happening because of the incorporation of a lot of the crypto projects that we know of, like Ripple and even XRP. So let's actually talk a little bit about this. Let's go back to February of this year, because again, it's only about 3 months ago, and if we look at this, we have the CFTC announces crypto CEO forum to launch digital asset markets pilot. So the CFTC will hold a CEO forum of industry-leading firms to discuss the launch of the CFTC's digital asset markets pilot program for tokenized non-cash collateral such as stablecoins. Now, the participants will include Circle, Coinbase, Crypto.com, MoonPay, and Ripple. The quote here is, "I'm excited to announce this groundbreaking initiative for the U.S. digital asset markets. The CFTC is committed to responsible innovation. I look forward to engaging with market participants to deliver on the Trump administration's promise of ensuring that America leads the way on an economic opportunity." So this is confirming, number one, that the CFTC is making sure that America is leading the way on not just economic opportunity, but on becoming a crypto leader by tapping into specific players like Circle, Coinbase, Crypto.com, MoonPay, and even Ripple. Yes, this is confirmed. You could see it here from the CFTC website. Now, on top of this, 3 days later, they unveiled plans for a tokenized collateral pilot with this, which again, this kind of gave us a little bit of a in-depth look into what exactly they were doing here, because again, it was mainly around stablecoin initiatives. But if we actually look, this was ongoing since going back to like November. We have when the Digital Assets Committee made the tokenization recommendation in November, they suggested the types of collateral would be World Bank bonds, government securities, corporate debt, money market funds, and gold. Of course, many stablecoins resemble money market funds. A key advantage of tokenization for margin purposes is the ability to provide assets immediately to meet variation margin requirements, typically with derivatives. And this is the focus here, derivatives, because it's the biggest market out there, quadrillions of dollars. The parties involved in the contract only put down a fraction of the potential exposure as margin. Hence, when the price of the underlying asset moves against them, a party may need to post additional margin. The challenge of providing non-cash collateral is the settlement delays. On the other hand, if tokenized assets are transferred, settlement can be almost instant. And this is where we actually look at some of the big players like Ripple and what they could actually do to offer efficient settlement of derivatives and change the way that derivatives are actually moved in general. And then we actually look at some of the recent moves happening around derivatives, which I'm going to pull this up in 1 second. Let me get it. So here we have from the DTCC on the 7th announcing that they're pleased to work with the ISDA on integrating the ISDA digital regulatory reporting into the DTCC's Global Trade Repository approved reporting mechanism. Now, this is the official announcement of derivatives changing. I know that that doesn't seem like it because of this announcement, but look at the underlying quote here. The DTCC is pleased to continue its support of the ISDA's DRR to better streamline trade reporting processes for market participants in the UK and EU. Through this collaboration, firms can anticipate an increase in acceptance rates for submitted trade data, as well as a reduction in the complexities and cost they face in adapting to evolving regulatory requirements. We remain committed to providing the most comprehensive and innovative trade reporting solutions to our clients globally at the best value. Now, let's actually go back to this announcement on April 30th, and this actually got posted by Generation Infinity. We did a video on this. This was breaking. The DTCC patent discovered tokenizing quadrillions in global assets, a new financial system, blockchain-based, legacy-controlled, and interoperable. And the patent confirms network support for HBAR, XRP, Ethereum, Bitcoin, Atom, Flow, BNB, TRX, and even XTZ. But on top of this, when we're thinking about this, all right, if we go back to the CFTC, they're already tapping in around derivatives through this pilot, program, which does include Circle, Coinbase, Crypto.com, MoonPay, and Ripple. Now, Ripple shines among all of these because of what they actually offer, utilizing even XRP. And now that XRP is actually included in this patent with the DTCC, we could actually, assume that Ripple and XRP are about to be tapped in a big way. But on top of this announcement, big shout to Smoke Dog, because we have here major. The DTCC just announced that they are integrating systems with Ripple partner ISDA, quadrillion-dollar deals, and Ripple is in the middle. Document it. And yes, Ripple is in the middle because they joined the ISDA back in August of 2023. And on top of that, we have over here, $2.3 quadrillion total value of securities processed in 2020. Smoke Dog, there's actually a new updated view of this. The total value that they transferred already and processed in the year of 2024 was up to $3.7 quadrillion. That's how much changed in a matter of 4 years, from 2.3 quadrillion to 3.7 quadrillion. It's insane. But if we actually go over here, we have, just as the DTCC provides settlement for US equities, for example, blockchain-based settlement networks such as Ripple, Rocks, I've actually never heard of Rocks, and Copper have the potential to provide near-instant settlement for global fiat currencies and digital assets. Entirely new remittance and payment products could potentially be developed for the digital dollar. And yes, that's exactly what's ongoing right now. That's why we're starting to see regulatory bodies like the CFTC announcing these joint forums. And what's even crazier about this, right, is that we know that the CFTC has been very active around pro-crypto innovation. Even going back to March 31st, for an example, the US CFTC withdraws 2 crypto staff advisories, citing market growth and maturity, need for fair treatment. They are ready to open the doors for crypto. And I think that even if we go back to February with this announcement, it's very clear that they're doing so. Now, talking about that, if we go over here to this announcement back in January, we know that Caroline D. Pam became the acting CFTC chair. What's interesting about that is we know that back in 2022, Caroline D. Pam did stop at the Ripple Labs office, the headquarters. I believe that this was actually in San Francisco. And she was basically learning about Ripple, about crypto, about blockchain, and even about XRP. And again, this was back in 2022. So the fact that she is now at the CFTC, they're announcing this joint CEO forum to talk about, this tokenization pilot. It's crazy to see all of this aligning perfectly at the same exact time that we're seeing patents coming out that's exposing network support for even XRP, as well as additional players here around tokenizing quadrillions of dollars for the new financial system being created right now. And by the way, we know that going back to May 5th, just recently, that Caroline D. Pam told Eleanor Terrett on stage at the Network Medici conference that the CFTC plans to be an observer on a handful of industry tokenization pilot programs in order for the agency to learn firsthand on how well tokenized assets can function in the real world and gain experience with the technology. So they are going all in on this tech to learn it, to make sure that we can integrate it, utilize it at scale because of the benefits tied back to it. Now, on top of that, we also know that back on the 6th of March, the CFTC finished up its CEO forum on digital assets. The event was attended by CEOs and high-ranking executives from major crypto companies. Again, this is this announcement. But if we actually look at all of the players here, you could see that Brad Garlinghouse was the one from Ripple discussing this with Caroline D. Pam. Again, it's crazy because the connections were there even back in 2022. Now, on top of that, we actually have over here big news. Acting CFTC Chair Caroline D. Pam has announced that they will soon be participating as an observer in industry tokenization pilots. This is from this announcement here, but listen closely to what she is talking about, and big shout out to Subjective Views for this.
So what's the same under the new administration? What's the same is that there is no tolerance at all for fraud or for scams, right? It doesn't matter what kind of fraud you're trying to commit, whether it's crypto fraud, whether it's some other kind of Ponzi scheme, it's just not allowed. And in fact, you've seen across the DOJ, the CFTC, and the SEC that we have all redoubled our efforts to pursue fraud in crypto and across the spectrum. But what's different? What's different is that in this administration, we have optimism. We have optimism about the promise of a new technology. We have optimism about its ability to contribute to the growth of the American economy and to prosperity for all Americans. And we have optimism about the ability of our government and our regulators to deliver on that promise. And so I'm very proud to be a part of that. And how are we accomplishing this? So I think it's really important to take a step back and really define what we mean when we're talking about digital assets, and particularly what it means from the financial market regulator perspective. So to me, when we talk about digital assets, it's really two distinct categories. The first is that digital assets is a new format, so tokenization, of traditional financial instruments. The second is that unbacked crypto assets is a new asset class. And so how we approach each of those things from a regulatory perspective is going to be different. When it comes to tokenization, we should have a tech-neutral approach, just the same way that we went from paper stock certificates to electronic records to now records on a blockchain. It shouldn't make a difference. Our securities markets will be deep, they will be liquid, they will be the greatest in the world, and they will contribute to the engine of growth in America and for entrepreneurs all over the world to come here for our amazing universities and our cheap and plentiful funding in both private and public markets. What is the other thing that's really important to keep in mind? What's important to keep in mind is that what are the use cases, right, that digital assets can bring to financial markets? And I see them as three key benefits, right? So number one is the ability to enable greater liquidity formation. And actually DeFi has a tremendous ability to aid in that liquidity aggregation and formation. Number two, and I've been saying for 3 years now, and I used to work at a big bank, so I've been very focused on this. Number two is that the killer app for blockchain technology in traditional financial markets is more efficient collateral management. The CFTC oversees the $700 trillion notional derivatives markets. There are untold amounts of margin and collateral being exchanged every single day, and with blockchain technology, that can become tremendously more efficient, and by being more efficient, it allows financial institutions to redeploy those assets in more productive ways. It can allow financial institutions to provide more credit to households and businesses. It can allow financial institutions to put those assets to work in many other ways. And then finally, number three is that the blockchain technology can reduce risks. Clearly, it reduces operational risk, but it can also reduce other financial and non-financial risks. So as an example, there are reports that have come out that have said that tokenization can save billions of dollars a year in both OpEx and CapEx. When you take that and extrapolate it out across the banking industry or other financial institutions, it's a tremendous savings. Now, what has the CFTC been doing to address these different areas? When it comes to tokenization, thank you, Nicole, for serving on the CFTC's Global Markets Advisory Committee's Digital Asset Markets Subcommittee. Last year, that subcommittee came out with not only a digital asset taxonomy to help bridge the gap between the lack of regulatory clarity in the United States and the standards that have been implemented across international standard setters as well as other jurisdictions, but we also importantly came out with a recommendation for tokenized non-cash collateral. That could be tokenized treasury ETFs. And so I'm very pleased to say, I'm announcing this is big news, the CFTC is going to be soon participating as an observer in industry tokenization pilots so that we can better understand the use cases and the benefits of the technology and engage in capacity building so we can be ready for a new or more expanded role. When it comes to crypto assets as an asset class, obviously having predictable rules helps the maturation of the asset class. So there's the President's executive order on digital asset markets. There's the President's working group that the CFTC is proud to be a member of, and we're contributing towards that 180-day report. We've been providing technical assistance to Congress, and just today they released the discussion draft of the market structure legislation. And we rescinded 2 advisories that were not appropriate anymore given the development of the asset class that were specifically targeted at heightened standards for crypto derivatives. And then we have completely ended regulation by enforcement consistent with the DOJ memo. So it's been a tremendous amount of work that we've accomplished in the first 100 days. And so I just want to leave you with some lessons learned as we think about the approach to regulatory clarity in the United States for crypto assets. I think when you consider what was the last most transformative piece of market structure legislation, it was the Dodd-Frank Act. It was how the Dodd-Frank Act completely changed the swaps markets, which, by the way, the CFTC also regulates. And so I implemented Dodd-Frank. I not only worked on the rules when I was staff at the CFTC, I then went to Citi and was the global head of swap dealer and Volcker compliance. And I ran a $1 billion compliance program, and the industry spent hundreds of billions of dollars in registration and compliance costs, and it took the CFTC 4 to 5 years to write the rules to implement the Dodd-Frank Act. But what did Dodd-Frank really result in? I think there's 2 things that everybody needs to keep in mind about getting the legislation right, and I really commend the efforts of Congress, and I've been pleased to help with this. We have to make sure that the compliance costs don't crush the innovation and crush entrepreneurs. Because one of the unfortunate results of the Dodd-Frank Act, while it made many aspects of the market structure better, and particularly central clearing was a great innovation, but it ended up with a regulatory moat, so that the barrier to entry was almost just completely prohibitive unless you were the biggest of banks. And number two, it resulted in market fragmentation. And because digital assets is inherently a global and borderless market, I think we must be careful to avoid the market fragmentation. That could be an unfortunate result if we don't get it right with not having the overbearing compliance costs. Thank you.
And what we are hearing from the CFTC here is that we are starting to see the entire market open, right? In the US, we are now starting to see some of the biggest regulatory moves happening around this entire space to break the chains that have been holding us down. This is why we're starting to see so many big moves happening from like the DTCC. We're starting to see those patents coming out. We're starting to see even tokenization pilots from the CFTC with specific names in this space. They're getting ready. They're trialing this tech. They're, prepping the markets, because the next step here is no longer trials. It's full-on integration and utilization of the underlying tech. And we know that Ripple is at the middle of almost all of this, because on every single one of these documents, every single one of these announcements, it's either Ripple or XRP. And this is exactly why I continue to tell you guys to focus on the names included in these meetings, at these discussions, in the PDF files, in the documents, because it is 100% crucial. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.